Hello, and thank you for visiting our website. My name is Scott Poncetta, and I'm the president and founder of Market Rent Services, a Bay Area company. And I just want to take a few minutes to tell you about what we do as a company and how we might be able to help you as an investor. We have one really laser-focused goal, and that's to help multi-unit property investors maximize their return on their investment properties. Many of the Bay Area investors or owners know that rents have skyrocketed in the last several years. But for a multitude of reasons, you may have elected not to raise the rents in accordance with that trend. Well, as an investor, that's a problem, and it potentially is a bigger problem than you realize. Our premise is pretty simple. If you're not charging rents, or if you're not charging market rate rents, then you're losing money, you're losing value in the property, and you're just not managing that asset effectively. Well, the cash flow part of this situation is pretty straightforward. If you're not charging as much as you could, you're losing money. But what most people don't really understand or recognize is the direct correlation between the amount of money that you're generating or collecting and how that's affecting the property value of that asset. Maybe you know that you could be getting an extra $300 or potentially $800 or even $1,500 in income off a given property. Well, what you might not realize is that you could be losing $100,000 or $300,000 or $800,000 in current market value by not making that adjustment. To illustrate this point, I'd like to use a simplified example with some real numbers. Let's say that you own a fourplex and you haven't raised the rents in 3 to 4 years. You're charging $1,500 per unit, but you could be getting $1,800 per unit. That's a 20% delta. What does this really mean to you? Well, of course it means that you are losing about $1,200 in income per month or $15,000 per year, which is significant in itself. But the way it affects your property value is alarming. Assuming typical operating expenses and a 5% cap rate, that property would have increased in value from approximately $1 million to $1.3 million with that one adjustment in rental income. Now, as an investor, I don't know why you wouldn't do that. And the longer that you postpone increasing those rents, the harder it is to accomplish. Well, this is what we do at Market Rent Services. We help investors make more money. And we do that by coming in, assessing that your property, doing a market analysis on what rental rates are. If we agree that an adjustment needs to be made, then we contact the tenant, we renegotiate your leases, and we execute those leases on your behalf. It's also important to note that our business model is a fee-based system, fee-based structure. We charge one time, there are no recurring fees, and there are no commissions involved. We act as financial advisors and come in and help you to generate maximum returns on your investment property. Please call us today for a free evaluation. There's no obligation. But we would love to talk to you, and we would love to find out if we can help you. Thank you very much.